How we doing, guys? Welcome back to the Trading Guys. I'm Ryan Mack. This is our weekly fundamental update. Today is going to be slightly different. I'm going to cover all the same stuff that I usually cover because that's just something that you do every single week, right? It's a habit. Today, I'm also going to be explaining the effects of Trump getting in, which are potentially fantastic. I'm going to explain bonds going up, like the 10-year bond, the 30-year bond. I am going to explain the effect because Trump's saying that he's going to lower taxes. I'm going to explain the effect on that and why it's a good thing. But also, there's a couple of bad things where if he increases the tariffs and so on and so forth. But I'll explain. Overall, I think it's personally fucking fantastic that Trump is in. It doesn't matter whether we like him or whether we hate him. It's nothing to do with that. It's about the policies which he's bringing to the United States, and they are fucking fantastic for business, guys. They will be fantastic for the stock market. Yes, because we had a rally the other day when you watched it, there will be a pullback, and what you get fucking clowns saying, oh, look, the market's melting now that Trump's in. No, it's not. The market's fucking pulling back to areas of value because they know the markets are going to be fucking bullish as soon as Trump decides his policies, etc., and it's going to fucking fly. So you will get pullbacks, absolutely. But they are pullbacks. That's it. You get pullbacks in the market. They are pullbacks so that all the big institutions can fucking lump in at great areas of value and make great returns. That's why it will pull back. All right. So starting off, I'll cover, obviously Trump getting in, I'll cover lowering taxes and what that means, right, before we crack on to dissecting this last week's news, next week's news, and what we've got coming up, okay? So, Trump getting in, fantastic. His policies are great. We won't cover them. You can fucking look them up online. But one of the things he's covering is he's going to lower taxes, for the everyday person by a lot, right? Him and Elon Musk are kind of really, really big on that. And why is that good? Well, if you're lowering taxes, what does that mean? It means you, the everyday person, obviously living in America, has a lot more money in your pocket. What do you do when you have a lot more money in your pocket? Do you save it? Do you invest it? Do you you spend it on a load of shit? And that's what I used to do when I had money. I used to spend it on fucking shit. If I had a shit car and I made a lot more money, I would just, instead of having a Ford Focus, I bought a fucking Audi TT, At the end of the month, when I used to make $2,000 a month and I used to make 10 grand a month, I was just as fucking broke when I made 10 grand a month. I swear to God, because what happened was when I was on 2 grand a month in the army, I was living in a 2-bedroom flat. I had a Vauxhall Vectra fucking, a 5 grand car. When I was making fucking 10 grand a month as a private bodyguard over in Afghan, tax fucking free, I was living in a 5-bedroom fucking bungalow with an Audi TT and a fucking Mercedes, So I just bought better shit, I wasn't any better off. I just bought better shit. And that's what Americans will do as well, okay? So when their taxes are lower, they'll have more money in their pocket. They're going to spend more money on shit. That's going to boost the economy because spending, blah, 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 blah. With all the numbers, I know that, the FOMC keep talking about cutting rates and blah, blah, blah. Yes, we've got a couple of lower rates here, but predominantly the US numbers are still too high to cut rates, like the labour force and blah, blah, blah. We're going to cover this now. Look, unemployment down. Employment cost came slightly down, but it's still fucking great. We're going to cover that in a minute, right? But the point is, you can only cut rates, right, when numbers / inflation, blah, 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 when it's all coming down on its own, right? Retail sales coming down, purchasing homes coming down, employment coming down, unemployment going up. When everything's bad, then you can cut rates, right? When the numbers are coming in as good as they are in the US, you just can't cut rates because you're going to make inflation skyrocket and then everybody's going to be in the hot locker, right? So there's one thing about it. Can the FOMC still cut rates? Yes, they could, but it was like, oh, why the fuck did you do that? That was like spicy, like that's a little bit on wobbly. But obviously they know what they're doing. You might get one more rate cut, maybe this month for December. You might. But then after that, I would see it, once Trump officially gets inaugurated, he actually gets into power and he actually, signs off on his policies and things actually change, where it's like, okay, he signed off on it now. He's actually doing what he said he was going to do and not just fucking lying to get into the White House. You know what I mean? As everyone does in the UK. So Once that actually happens, then you'll see, you'll see rates remaining the same and everything going well, and you will potentially see rates even going up. Now, see when we look at this here, look, you've got GBP. So, in fact, they must have just cut rates because I'm sure it was at 5. Let me just quickly check this. Hold on. Well, because I'm just about to cover that. That's why. Let me just check the cut rates. Last week. Is it this week? Let me check this week. Yes, the cut rates. There we go. So what you may find now, guys, as I was just mentioning, you might find this is the last rate cut now that Trump's in. You might, right? You may get one more after this, right? But I don't think so. I doubt it because look, these numbers are fucking fantastic. Look, they're coming back in great. We're going to cover this in depth again, but they're coming in really, really good, right? And you just don't want to be cutting rates into that. You don't. So what is like? See this here, right? I hope you can see that. See this here. These are obviously the central bank rates, right? 4.75, 4.75, 4.75, 4.35, blah blah blah. Now, the higher the central bank rates are in each country, right? I.e., inflation, it's not that good for you as a person, living in that country, because then your fuel's higher. The cost of buying stuff costs you more money, right? Filling up your car with fuel costs more money. Your rent probably costs more money. Buying clothes, shoes, eating out in a restaurant, going to your favourite cocktail bar, all these things they're more expensive, right? Is what I was trying to bloody say there. They're more expensive, so your cost of living is higher, right? So obviously you, as an everyday person, that's not a good thing, right? However, for the country, rates being high is fucking fantastic. And whoever has the highest rate, in theory, potentially, will get more investment from outside of the country, right? So the higher the interest rate, the higher the rates, the inflation rate, blah, 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 whatever you want to call it, it means countries they want to invest in your country more, because when they invest in your country, they're going to get paid a higher yield. They're going to get paid a higher return. If the interest rate's higher and someone invests into them, they will get paid a higher return, right? That's how it works. So that's why it's fucking fantastic when interest rates are high. If you're an investor, not if you're an average Joe in the street like you and I, okay? So, where was I? I'm losing my train of thought. So why that's a good thing in terms of trading currency, right? If people keep investing in the country, that means buying government bonds, right? So if you're buying government bonds, the only way to buy government bonds is that you need to buy them in that currency. So let's say we're talking about United States right now, right? And everyone's like, fucking hell, Trump's in, this is going to be amazing, amazing stock market, amazing currency, blah, blah, blah. We're going to go back into inflation. Yes, here we go. Everyone's getting excited. What you'll find is, in order for anyone, from outside or anyone at all, to buy bonds in the USA, you need to buy them using USD. You need to buy them using the US dollar. So what happens is there's all this sudden demand for people exchanging and wanting the US dollar, because they're exchanging their local currency for the US dollar, creates a huge demand for the US dollar. What does that create? Dollar strength. So it's fucking strong for the USD, right? You see how that comes together? So I hope this helps you, kind of piece stuff together. Inflation is not good for you and I, the average Joe. However, inflation is fucking fantastic if you're an investor or you are the country, itself. It's great for the economy, okay? So I hope that squares things up for you. Now, without any further ado, let's crack on to our weekly habit. Okay, if you're new to this channel, I apologize. Sorry, if you watch this channel often, I apologize if I'm repeating myself. One, I repeat myself because every single week we do exactly the same thing. That's all trading is. You're just getting into that fucking habit of doing stuff that works, and you just do it and do it and do it. Have you ever heard other traders or other things online saying, have you prepared for your trading week? And you've maybe sat there and been like, what the fuck does he mean prepared for my trading week? How the fuck do you prepare for your trading week? Like, I just look at the chart, and when I see a candle going up, I fucking take the trade, you know? Well, that's not preparing, right? This is what you should be doing every week. This is how you prepare for trading. If you are a scalp trader, of course, you can completely fucking ignore me and you could just focus on price action if you like. It's not going to hurt you learning fundamentals as a scalp trader, because it then gives you an idea of, right, is it predominantly buys or sells, highest probability. But overall, it doesn't matter, because you're in and out in fucking, a minute, 5 minutes, whatever. But if you're a day trader, or you're a swing trader, you're a position trader, whatever, you're a longer term trader, it's essential that you know fucking fundamentals, guys. And when people say, are you preparing? This is how you prepare. All right. So we're going to start off. Grab yourself a notebook and a pen. You're going to write at the top of the notebook trades, or this week's trades, or whatever you want. Okay. Then you're going to write strong, weak, and neutral. Okay. Strong, weak, and neutral from left to right. It might look in reverse because obviously I'm on the camera, but it's from left to right. Okay. Again, as I always say, in case you're thinking this is your first time on my video and you're like, well, that doesn't make sense. It should be strong, neutral, and weak. I understand where you're coming with that. The reason why we do strong, weak, and neutral is because we mark down all the strong economies / currencies, all the weak economies, and all the neutral economies. Once we get to the end, you can just score out the neutral, and you then know that you're only looking for the pairs like strong to weak. So let's say the British economy is really strong and Japanese yen is weak. You put GBP here, Japanese yen there. That then lets you know that this week you are only looking for potential buys in pound yen. You know what I'm saying? So have you ever looked at the market and you've came on and you've maybe watched other traders and you're like, fuck, this guy's in a buy, this guy's in a sell. How the fuck do you know if you're looking for a buy or a sell? This is how you fucking know. You base it on economies, right? You base it on economies. If you think, there's a couple of fucking candles here, and a banker goes like that, right, guys, I'm gonna draw a line down here. If this candle breaks my line, I'm gonna enter the market, $500 million. You fucking lost your mind, guys. That's not how they do it. And if you're drawing stupid fucking lines in your chart, you need to stop it. I used to do that bullshit as well. I thought it was great. I used to make money doing it, which is fucking terrible. The worst thing you can do is make money doing that shit, because it's not a long-term strategy, okay? It's fucking bullshit. And like someone woke me up a while ago, I'm here to wake you up. Right? And I'm trying to make it fun, because it's quite a boring subject, but I'm trying to make it fun so that you can learn it and you digest it and you understand what all of this means, right? So without any further ado, let's get fucking cracking. I always, as you know, if you've been here before, I always do each currency individually, except from AUD, China, and New Zealand. And that's because they're all closely correlated, okay? We checked last week, and then we're going to check next week, all right? Not last week, sorry. We want to check that because it's still Saturday, that's why it hasn't changed yet. We want to check this week and then next week, okay? So let's have a look at AUD. Inflation gauge month on month is up. Job advertisements is down. So job openings is down. It's not very good. AC commodity prices down. Cakes and PMI services has increased, so that's a little bit positive for China. I mean, it's definitely above 50 now. So anything above 50 means bullish, okay? Positive, good news, bullish. Anything below 50, literally from 49.9 downwards, is bearish, okay? If this here, where it says 50.3, right? If that said 58, for example, right? And then down here said 52, that's not bullish, okay? It means things are slowing down. Things aren't as good as what they were before, but as long as it's above 50, it's still bullish, okay? Very important to remember that. And I'll probably cover it in some, there will definitely be an example here to give you, all right, as we go through. So that's positive. Now, why we care about China and we don't trade Chinese money, I hear you ask, is because China is basically the largest fucking producer of pretty much everything in the world, right? And they do so much close business. The business is such closely tied to Australia, New Zealand, predominantly Australia, but yeah, also New Zealand. And so if manufacturing and everything is going up in China, that means they're going to be buying more supplies from the mines in Australia, and that's why then it's good for the AUD, right? It's going to strengthen the AUD. Also, if China is doing bad, then they're not going to be, fucking buying all these supplies and tin, copper, steel, iron, all this kind of shit from Australia. So then things are going to drop in Australia. So that's why we care, okay? If USD is strong, again, that can mean the AUD is going to get weakness, okay? If USD gets weakness, you will potentially see the AUD will get some strength from that, okay? So you need to try and remember all this, right, and put it together. It takes time, don't worry, but I'm just explaining, okay? AUD cash rate, 4.35%. So that's sticky. It hasn't changed. That's fine. They're really trying to hold on to that. NZD unemployment change, yeah, NZD is really shit right now. Sorry, employment change, is down. Unemployment is up. Now, here's one of the examples that I literally just mentioned a second ago. One thing that you shouldn't do, okay, is look at that just by colour and say to yourself, oh, that's green, that must mean good. No, it doesn't. If you look at previous, you look here, it was 4.6%. And you look at it now, it's 4.8%. That means unemployment has went up, right? It's increased. That's not a good thing. So why the fuck is it green then? Well, it's green because it was forecast, right? They priced it in that unemployment was going to hit 5%, and it didn't. It actually came in better than they forecasted. That's why it's showing as green, because it came in better than it came in better than they thought it was going to be. Okay, that's why it's green, but it is not a good thing, because if you look at the previous, it came in worse than before. Okay, so that's bad. Good trades balance. So trades balance, I mean, that's low. That's not very good. That basically means a country is importing more than they are exporting, right? And that's not good. That leaves you with a deficit, okay? That's not a good thing. You really want, if a country's exporting more than they're importing, that's good, okay? But you can see here with the big drop, they're importing more than they're exporting. That's what the good trades balance means, all right? US denominated trades balance, maybe that's things they have to buy in USD, like oil. That's increased. Oh, sorry, that's bloody China, not even the US. So that's increased. So that's good for China. Good for China. Good for China up here. So things are finally looking a little bit more positive for China, right? They've been in the hot water. Now, this 1 week of good news does not mean that China's all of a sudden fucking fantastic, right? But it means that if we continue to see this good news next week, the week after, the month after, then it's like, okay, China's now building themselves back out of this fucking pit that they dug themselves into, the hurt locker. But, it's good to see it, but it doesn't just mean it's all of a sudden strong, okay? CPI year on year is down. PPI year on year is down. Yeah, so that's not good. CPI and PPI, both of them are very important. So CPI, you'll see them getting posted every month, I believe, right? And you'll see like year on year, quarter on quarter, quarter on year, blah, blah, blah. So CPI basically, right, is the cost of goods. So what they'll do, in brackets, commas, is they'll go to a supermarket, whatever country you're in, maybe Alphamart, maybe fucking Asda, Tesco, Walmart, you know what I mean? They'll go to a supermarket, they will buy a basket full of goods, toothpaste, a packet of crisps, a bar of soap, shower gel, a chicken, 12 eggs, a litre of milk, a fucking block of butter, a block of cheese, a sirloin steak. Do you know what I mean? You get the picture, right? They'll buy a basket full of shopping, and every month they will buy the same basket full of shopping. And if it's getting more expensive, then inflation's going up. You see what I'm saying? And that's how they base it. And that's how CPI is a good indicator, because if inflation's going up, If CPI numbers are going up, it means potentially inflation's going up, which is good for the country, not good for the people, but good for the country and good for us as traders. Okay. PPI is pretty much the same thing, but that's for companies, right? So CPI is for, you could remember, civilians, and PPI is for companies. So maybe if you want to remember, it's projects. I don't know, just because it's a P. So what that is determined by the cost of produce that it's costing a company. So let's say you make steel products, right? And you have to buy steel rods or steel sheets to then melt them down and fold them up and turn them into whatever you make, your fucking office file cabinets or something. PPI is the cost of you buying all those steel sheets in order to make your metal office cabinets, right? That's what PPI is. And obviously, if that goes up, it's not good. So, AUD, I don't like it. What did I have it as last week? Probably shit. Yes, I had it as weak last week. I still think it's quite weak. Some might argue, remember, this is just my opinion, okay? Some may argue that it's neutral. I don't think so. If it was against the Japanese yen, I would be buying AUD, right? Because it's far stronger than Japan, because Japan's totally shit. But if it was against the pound, then I would be buying the pound. I wouldn't be buying AUD because then it's shit. So I'm going to put it down as weak, but some may argue that it's neutral. Okay, NZD is definitely weak, and then of course we don't write down China because we don't trade it, right? So now what we do is we move on to next week and we see what news we have potentially coming up for next week. All right. I know this is long-winded, guys. This is the fucking life of trading. See all this shit you see online where they're fucking jumping in here and jumping. It's all fucking bullshit. This is what you have to do in trading. All right, real trading. I mean, I'm not talking about scalp trading. If you are good at scalp trading, then you fucking crack on. I'm talking about genuine, long-term trading. All right, this is what needs to be done every week. NZD, we've got inflation expectations, new loans. New loans is quite a good thing. So if they're giving out new loans, then that means people are getting more money. What do people do when they get more money? They fucking buy more shit. Okay, that's what happens. And if they buy more shit, it goes back into the economy. It boosts the economy, so that's good, right? NZD visitor arrivals, I want to see that. Wage price index. Yeah, we like to see wage price index because, again, if people are earning more money, it means that they have more money in their pocket and therefore they're going to spend more money, right? So if wages are increasing, that's a good thing. Average earnings, blah, 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 that's all good, okay? Employment change, we want to see that. Unemployment rate, we want to see that. They're anticipating it to be less. So yeah, so that would then tie in. If it is less, that would then tie in with me saying, AUD is weak for me. All right. Industrial production year on year. Yeah, we definitely want to see that. Retail sales year on year. Yep, want to see that. Fixed asset. Pardon me, guys. Fixed asset. I had a Bloody Mary. It's giving me bloody heartburn. Fixed asset investment year to date. Yeah, we want to see all them. Okay, unemployment rate, blah blah blah. Okay, so yeah, there's a lot of good news next week that we want to see. Moving on, it gets a little bit faster now because I'm just doing one currency at a time from now on. Okay, so now we start in Canada. Apply filter. You want to check the dates. Make sure it says this week, i.e., the week that's just passed us. All right. Let me see. Trade balance at Canada. Shit, we already know that. IVPMI is good. So now there's another example, okay, that's red. Don't just look at that and say, oh, that's bad. Yes, it's bad in terms of it's getting worse. Look, 53.1, so it's dropping. However, it's above 50, so it's still bullish, right? But it is getting weak, but it is getting worse, so it's still a negative for Canadian dollar, okay? Unemployment change, employment change is, very poor. Unemployment is the same. So it's green, but it's just because it hasn't changed. So unemployment's the same. So, and 6.5% is quite high. So it's not good for the Canadian dollar. One thing that you have to remember with the Canadian dollar as well is that it's very heavily oil based. So if oil starts to fly and do really well and it's high prices, that will give strength to the Canadian dollar. You might look at like the markets for Canada and you might be like, well, everything about Canada's shit. It's all negative. Why the fuck is the Canadian dollar flying? And then if you go and look at oil, if that happens, right, you'll probably find more often than not that if that's the case, that all the data and fundamental news for Canada's pretty shit, but it's flying. You're like, what the fuck? Look at oil, right? And you'll see that oil is probably flying, and that's the reason why the Canadian dollar will have this kind of false strength to really push it through. All right, that's what you'll find. So yeah, we know Canada's weak. Did they have a week last week as well? Yes, I did. This week we are looking at building permits. Yeah, I mean it's only month on month. We really like to see quarter on quarter, especially like to see year on year. But at least month on month lets you see what you're potentially looking at, right? And it's probably going to be shit. Manufacturing sales month on month. Yeah, so we don't really have big news for Canadian dollar next week, but it is, for me, it's going to maintain its position in a week. Okay, I'm definitely not changing it from week. It's really shit. Moving on. See, it starts to get faster now, right? When you're just doing one at a time. We need to go to last week. Sorry. Unemployment is the same. Yeah, it never really changes. Foreign currency reserves is up. SECO consumer climate. Oh, excuse me. Minus 37. Okay, so nothing really thingy there. CHF, yes. I think I just had it in neutral, right? I've pretty much always got CHF in neutral. There will be times when it's strong. So times for me when CHF becomes strong is when we have a change in sentiment. So you get two sentiments in the market. You get risk on sentiment, right? And you get risk off sentiment. So we all make money during risk on. So the markets are pretty much, 98, 99% of the time risk on sentiment, right? Risk on, USD does great, gold does great, Bitcoin does great, blah, blah, blah. Then you get risk off, which means maybe America's kicked off with, Syria. They've made this new fucking war again. Everyone's like, oh no. And so there's a load of uncertainty in the world, right? Oh shit, what's going to happen? And because America's involved, people will shit their pants and they'll cash in their fucking investments in the US and they'll move it out of the US and they'll put it into a safe haven until things become more clear. Like, right, is this war going to finish after a month and we're going to have peace negotiations and then everything will be back to normal? Or like, is it going to be like Russia and Ukraine where things just crack on and then it becomes the norm, right? That war's just normal. Nobody cares about it anymore, right? I mean, it's just as violent now as what it was in the beginning. Everyone cared the first month. After the first month, they're like, yeah, fuck it, who cares? Couple of Ruskies, see you later. So that's what happens. So during an initial period of war, Iran, Israel, Russia, Ukraine, if America kicks off with fucking someone else again, then the markets will instantly change from risk on to risk off. People will move their money out of USD. They'll move their money into gold. They'll move their money into Bitcoin. They'll move their money into Japanese yen, believe it or not, because it's a very safe place. They'll move their money into CHF, blah, 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 right? So, when people say, oh, when USD drops, gold flies, it's nothing to do with the fucking USD dropping, the gold flies. If you go back in the market, you'll see through this year, there's been plenty of time where USD's been like that, and gold has also been like that. The both of them have been flying. So if that was just the case that, when USD melts, it's bullshit. It's nothing to do with that. It's to do with risk, the risk sentiment, okay? The sentiment of the market. Is it risk on or risk off? And if you look at those periods when, it's went down and that's went up, it's because something's happened, right? So when something kicks off, my point is, when something kicks off, people will move their money out of the likes of USD and they'll put it into things like gold and CHF and stuff. So at that point, I would be like, oh, there's a war kicking off. Boom, fucking happy days. Let's look for CHF buys, CHF USD, going to buy CHF and sell the USD, right? Things like that, okay? China, we've just done that. Euro, that's next week. So I want to see this week first. Okay, so when we look at the Eurozone, of course we care about Spain and Italy. We do like to see them, right? But the ones that we really, really care about that make a difference in the overall market of the Euro is Germany and France, okay? Yeah, we do care about France and Italy, if it's a year-on-year or blah, blah, blah. But the ones that we really, really care about is France and Germany, all right? The rest are just like, yeah, okay, it's a little nicety. So I forgot to explain the reason for that. It's because they just don't really have the size to have any great impact in the rest of the Eurozone. Okay, that's why it is. I should have explained that. Spanish manufacturing PMI is up 54.5, so that you could say that's bullish. That's good. Italian is totally shit, negative. French, shit. German, shit. Final. Yeah, French, sorry. That's all terrible, guys. One bit of good news, the rest of it's terrible, right? All bearish. Again, don't get confused because that's green and think, oh, that must be bullish. Oh, look, that was 42, now it's 43, so it's bullish. No, it's not bullish. It means things are getting slightly better, but it's not bullish until it passes that 50 threshold, all right? It's still bearish. And 43 is pretty shit. French industrial production, Spanish unemployment is massive, but we have to remember Spain's got these massive floods right now, so that it's not the only thing that's made unemployment through the roof, but it probably will be a big factor. All right, how many businesses have just been fucked? How many small businesses are like, yeah, we can't come back from this, we're totally fucked. Do you know what I mean? So that's why during natural catastrophes, disasters, you may see unemployment spike when it shouldn't really have spiked. All right, it won't be the only reason, but it's one. German factory orders month on month 4.2%, so that's very good. That's went from -5 to 4.2, so that's good, but it's month on month, right? So it's not going to change the whole grand scheme of things, but it does show you that things are getting slightly better. Spanish services PMI is 54.9. Again, don't be put off that that's in red, because if you look before, it was 57, now it's 54. It's only red because it was they had priced it in to be 56. It's came in less than they thought, but it's still bullish, right? Because it's still above 50, so that's bullish. Italian services PMI 52, that's bullish, good. French final services PMI is 49.2, getting better, but it's still bearish. German 51, getting better and bullish. Final services better. Yeah, so it's really mixed data. So see when you get this and you're like, oh fuck, Ryan, I'm really confused. Like there's a couple of really good news here, and then there's a couple of really bad ones. That's just mixed data. That's what it's called, guys. Mixed data. It's like we're having a bit of a good time, bit of a bad time. Nobody really knows what's happening or the direction it's going to go. So this is the kind of thing you could be like, okay, they've now went from being strong to potentially being neutral, right? You don't normally go from strong to weak. You normally go from strong, neutral, weak. Weak, neutral, strong, because it's a process, right? It's a transition. So that is what I would personally call mixed data, right? What did I have Euro down as last week? Yeah, I had it as neutral. Yeah, I was going to say neutral. So this week coming up, we've got final CPI. It's month on month, but yeah, we'll still take a look. Flash GDP quarter on quarter. Flash employment change quarter on quarter. Yep, all good. German 10-year bond auction. Let's see if that's good or not. So obviously, if numbers are higher in 10-year bond auction, it's good for the economy. It means more people are investing in that economy. Like I said, if more people are investing in the 10-year bonds, it means that they have to buy it using the euro. If more people are buying using the euro, it means there's a higher demand for the euro, which means euro strong, okay? But obviously, you need to piece all of this together. You don't just say, "Oh well, the bonds are up, so that means it's strong." Right? I wish it worked that way, guys, but it doesn't. Right? You need to put all these pieces of the jigsaw together. Excuse me, got a bloody hair in my eye. And then you have to kind of look at it. You have to kind of take a step back and be like, "Okay, how is it looking?" Right? Flash employment change, Flash GDP, German WPI. It's all month on month, but yeah, we'll take a look at it, right? So for me, euro is still neutral. And I know that you might be watching this. I mean, if you've got this far in the video, 33 minutes, you might be thinking, fucking hell, this is a lot of work. It is a lot of work. You're here to make a lot of fucking money. You think it's going to be easy? You think you're just going to draw a stupid little fucking 2 lines and say, oh, it's a flag. Oh, if it breaks my flag, I'm going to change my family's life forever. No, that's not how it fucking works, you maniacs. You need to fucking work. What have we got here? Trade balance, German Bubba monthly report, blah, blah, blah. Okay. Oh shit, I'm way ahead of myself. Okay, so we've done that. My bad. GBP. Last week. I want to look at this week. Pound, okay. Retail sales year on year is down, so that's negative. Final services PMI is up, fantastic, because we are a services country. Bonds, 10-year bonds is up, fantastic. Construction PMI is still fantastic. It's went down, but it's 54.3, which is still bullish. All of that's bullish. Halifax HPI, so here's another one to point out to you, another learning point. So it's down, right? However, it was already priced in. They already forecasted it to come down to 0.2. So you'll normally find even if it comes down, there's little effect on the market. Why? Because they already anticipated it. They were already like, yeah, it's going to come down anyway, and they already anticipated it. I.e., they already priced it into the market, 1 or 2 months ago, because they know all this data well before we do, right? This is just when they publish it. They already know it fucking ages ago. It's always a month behind. Bank of England cut rates by 25 basis points. Again, I don't know if you're going to get another rate cut this year. You might, right? Because anything can happen in the markets and we need to be prepared. We need to be, not stuck on a particular thing. We have to be very open and very lucid, we have to be able to flow with whatever the market throws at us. We have to look at the data and be like, okay, it means this. So they've already cut rates by 25 basis points. That's fine. That was anticipated. It was forecast, right? So that's fine. Pound is still strong, guys. It's still a fucking powerhouse right now. Let's see what we've got. Oh, we've got quite a big one. Average earnings. We want to see that. Claimant count. So claimant count is basically how many people are claiming like universal credits. Basically, if you're not from the UK and you're like, what the fuck is universal credits? It's basically people that claim money from the government to live because they don't have a job, so the government pays their rent, gives them £120 a month to sustain themselves, and all this kind of stuff, right? So if that's up, it's not a good thing, right? Average earnings, if that's up, that's a good thing because it means people have more money, they're going to spend more money. Unemployment rate, you know what that is. We don't want that to be high. If that's higher, then it's not a good thing, right? However, if it comes in at 4.1, then it means they already planned it. Like they already priced it in, okay? So it won't really have a massive effect on the market. GDP month on month, yeah, we want to see it, but it's only month on month, so we don't really care, but we just like to see it, right? Prelim GDP quarter on quarter, want to see that. Construction output, yep. Good trades balance, yep, we want to see that. Index of services, yes. Industrial production. Just remember, when it comes to things like production, industrial production, manufacturing production in the UK, we don't really care if those numbers aren't big because the UK isn't a manufacturing country. It's a services country, right? Every country has both services and manufacturing, but the UK is a services country which has manufacturing. Japan is a manufacturing country which offers services, so with Japan, we want to see loads of manufacturing and we don't care if services are pretty low. And with the UK, we want to see really good services and we don't really care if manufacturing is low because we're not a manufacturing country, okay? But just so you know, right now, UK is high on both services and manufacturing, which is why it's pretty fucking good. November 17th, is that next week? Wait there, let me just check. Have I jumped the gun? Yes, I have jumped the gun. My bad. Yeah, that's what I want to. Sorry, that's the one I was already bloody on. Yeah, so next week we want to see these. But for me, right now, pound is still strong, guys. It's still a real powerhouse right now, and the rates are still high, so it's good for investment. So see this down here. You see Japan, right? The rate's like 0.25%, and then like let's say GBP's 4.75%. What that essentially means is you can, like, these big institutions can go and borrow money from Japan, or even if you're Japanese, you can borrow money from Japan, right? And you can put it into UK investments and you will get a massive fucking return on your money. And then you just pay back what you borrow from Japan with a shitty little bit of interest and you keep tons of profit. That's how it works, okay? And that is what happens. When Japan was at minus 0.10, minus 0.10, you remember about 2-3 months ago, we had a huge market crash and everyone was like, what the fuck happened there? The market's crashing and the world's going to end. No. Want me to tell you what happened there? For about, I don't know, a good 2 years, maybe even 3 years, Japan's interest rate was at negative inflation or deflation, whatever you want to call it. It was at negative inflation at -10, right? So what that means is you could go, if you're a big institution like a bank or a Japanese or you're a big company or whatever, you could go and borrow all this money from the Bank of Japan, and they weren't charging you any interest. So you could borrow all this money for free and not have to pay any interest in it. So what people were, doing was they were taking fucking millions and millions of, Japanese yen for free. They were lumping it into the American stock market, all these different stocks and blah, blah, blah. And as it was fucking flying in its bull run, they were making mountains and mountains of profit. And all they had to do was pay back Japan the money that they borrowed with no interest, right? Then, a couple of months ago, when the Bank of Japan increased their interest rates to zero, from -10 to plus 0.25, all these companies were like, fuck, because they've got millions upon millions of dollars, right, worth of money there. So think of how much fucking money they need to pay the Bank of Japan. So it's like, fuck, it's no longer free. So they all cashed out all their fucking stocks and shares. Because if the American markets crashed at the same time, like genuinely crashed before they lifted their money out, they're fucked. They owe all of this money back to the government of Japan, right? Plus interest now. So what happened was all these big conglomerates that invested all this money using free Japanese money, all of a sudden overnight had all this fucking interest to pay. And that's why you've seen them all cashing in the fucking stock money, the money from the stocks, and they getting it out of the American stock market and fucking firing it all back to Japan so they didn't get hit with big fucking things. Keeping their profit and then giving all that money they owed back to Japan so they were good. And then you saw what happened after that. Markets started picking up again, because the companies just started slowly putting their money back in again because it was safe at that point. You see what I'm saying? That's what happened. That's why you got that crash like 2 months ago or 3 months ago, whatever it was. But if you've been following the markets, you know what I'm talking about, right? That's why it happened. Okay, so it's really important. You can see how important it is to know this stuff, right? And then you know what the fuck's happening in the market. You know why it's happening. So when everyone else is looking at that and going, oh my God, the fucking world's going to end, the markets are dying, it's going to crash, you're just sitting in your chair like, no, it's not. It's because fucking Japan increased their interest rate. Next week, the markets will be flying again. So what am I going to do? I'm going to sit and look at the indices. I'm going to look for them to pull down and hit an area of value, very fucking cheap, and I'm going to buy in next week because I know they're going to fucking fly again. Do you see what I'm saying? That's how powerful it is, knowing fundamental data and how to read it properly and how to implement it, right? It really does make you stand out from every other fucking fake guru that's out there, guys. I'm telling you, promising you a Lamborghini if you deposit $5,000 and you'll fucking change your family's life. It's a load of shit. They're just making money from you because they're horrible little cunts. Where was I? Where are we now? Pound. Yes. So is it next week? I think I keep going a week ahead all the time. Next week. There we go. Yeah. So we want to see all this average earnings, unemployment rate. Yeah, we want to see all this. Okay. So that's good. So for me, pound is still strong. Japan, we know shit, but we always have to look at it right. Let's look at this week. Monetary base year on year down. Average cash earnings year on year, the same, sticky. It's only red because they thought it was going to be high and it's not. So it's sticky. It's not better and it's not worse, right? It's just the same. 10-year auction bond is up slightly, but it's really shit. Household spending. So you know why you might, I'm not saying it is the reason, but why you may have got an increase here, because people were unsure if Kamala was going to get in or Trump was going to get in. So you may have got a little bit of risk off sentiment while people were unsure, lifting their money out of the US, putting it into safe havens like CHF, Japanese yen, blah, blah, blah. And then as soon as Trump got in, well, you saw it, right? Within the first 24 hours of Trump getting in, $1.28 trillion got pumped into the US stock market. 1.28 trillion. It's fucking insane. Household spending year on year is down. Again, it's green because I thought it'd be worse, so that's why it's green, but it's still, it's up, but it's minus 1.1. It's still shit, right? Leading indicators is up. Japan's nowhere near being good year, guys. What have we got next week? Bank lending. Yeah, we want to see that because if banks are lending more money, then people are spending more money. PPI year on year, yep. 30-year bond, yep. GDP, yep. So we've got some decent news next week that we want to see. Again, for me, guys, Japanese yen is still weak, all right? What have we got coming up next? I think that's nearly us. Yes, we'll be USD, guys. That's us done. What I'm going to do is we're going to jump across to Trading View, and we're going to look for potential trade setups, right? And you can mark up your charts and copy me, okay? So this week, what do we have from the USD? Factory orders have increased. They're still minus, but they increased. Trade balance, that's decreased. Obviously, that's what I was talking about. Oh, excuse me. That was before trade. That was before Trump was officially in, right? Because we didn't find out until it was either the Wednesday or Thursday. We didn't find out until. So that's obviously people. This data is obviously lagged, right? It's from previous and not from right now. So, final services PMI 55 is good. I mean, it dropped slightly, but it's still 55 is fantastic. ISM services fantastic. Presidential election. There you go. Crude oil inventories. So when the number is higher, that means there's more supply than there is demand. So what does that mean? That means less people are buying oil using USD. If less people are buying oil, which you need to purchase with USD, it means that there's less demand for the USD, and therefore it's detrimental to the currency. It brings this kind of weakness to the currency, right? But that's only one thing. I'm just explaining what that is. That doesn't mean the currency's weak, okay? Obviously, we have to compile it all and look at the bigger picture, all right? But now you understand when that's high, why is it bad? Shouldn't that be a good thing? No, it's not. You want to really see this minus, because that means if it's minus, there's more people buying it than there is the supply on hand, okay? And if more people buying it, it means more people are using USD and the currency is strong. 30-year bond auction, yeah, very good. It's going to be even better. The next time we see this, it's going to be even better because, like I said, all that money that got pumped in. Unemployment claims are up slightly. That will soon change with big T. Prelim non-farm productivity is down, so that's good. Prelim unit labour costs is up, good. Final wholesale inventories down. Mortgage delinquencies 3.92, so that's down, so that's good. I think that's people. Yeah, I think that's people that have failed to pay their mortgage. Let's just double check. Sometimes if you forget, just have a quick look. There you go. Yep, it is. Mortgage delinquencies is when people fail to pay that. Maybe someone's lost their job and like, fuck, I don't have any money to pay my mortgage this month. And they're falling behind. So that's better. So that means more people have been able to pay their mortgage this month. So that's a good thing, right? Natural gas storage, I don't really bother with that. Federal funds rate, they cut by 25 basis points. You might not see that again they could, but yeah, who knows? FOMC statement, blah, blah, blah. Consumer credit is down. It's only month on month, though. Consumer sentiment is up. Oh. Excuse me, guys. Prelim inflation expectations. Okay. Let's see what we've got next week. Small business index, Cleveland Fed, blah, 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 blah. Just fire through this. CPI. Okay, we'll get CPI next week. Again, of course, we'll have a look at the month on months, but we really want to see the year on year. That's what we care about, right? It's the year on years. You're not going to see any changes just now because Trump's not officially in yet, right? He has to sign his policies and get them actually working. It takes time for these things to kick in, right? Core PPI month on month. Yeah, okay, that's good. We've got CPI and PPI next week. We've got retail sales, Empire State Manufacturing. Yeah, so we've got a lot of news this week coming up that we want to see. All right. So again, for me, USD is still strong. Okay, so I'm going to give you a quick rundown just to summarize. For me, economies / currencies, strong, pound, USD, weak, AUD, NZD, CAD, Japanese yen, and neutral, CHF and euro. Okay? Now, moving on. So what I do is, when I'm looking at trades and stuff, right, I don't just jump on them. I get all my fundamental data done for the week, right, and then later on, I use this. It's called Prime Market Terminal. So let's just pick up here, GBP, GG. Let's pick up here Japanese yen. Okay, so you scroll down, pick up here. Come on. Let's start at overview. Now, you don't have to use all of this, right? I understand if you're watching this and you're first looking at all this, your brain's going to be fucking melting, right? And you're going to be thinking, what the hell is this, right? Your brain's going to be fried. That's normal, okay? You don't need to use all this. I literally use 4 things. The guys who created this is actually one of my good friends. The guys who created Prime Market Terminal, they've created it so that any type of trader can use it, right? So there's going to be things that I use that a position trader wouldn't use, and things that a position trader would use that I wouldn't touch. There's going to be things that hedge funds would use that I wouldn't even bother looking at, So you have to. I look at overview, I look at seasonality, I look at DXM, which is Dumb Money Index. It's retail traders like you and I, because they're always fucking wrong, right? So you mostly want to be doing the opposite of them because they're fucking idiots. And COT is basically the banks and the big institutions. It tells you what they're in, and you want to be in line with them, right? I'm not trying to come out with this rhetorical trade like the banks. I'm not saying that. I'm just saying you want to be in line with them because these are the guys who have the money that moves the market, right? If you and I, as retail traders, if every single retail trader in the world had a stop loss of $200,000, right, and we all traded on the same pair in the same direction at one time, we do not have enough money combined to move the market at all. It would barely even fucking budge, right? So they're definitely not moving when you enter fucking $50. You know what I mean? I'm not slagging your $50. I'm just giving you the thing there, right? So banks are pumping in fucking billions, which actually moves the market. So do you want to be in line? Do you want to be copying retailers, or do you want to be copying what the fucking banks are doing? Do you want to be doing that? Now, COT stands for Commitment of Traders. Okay, so by law, you might say, well, how the fuck do you get this information? Why would they give you that information, right? Well, they have to by law. COT stands for Commitment of Traders. So what happens is every single Wednesday, every massive institution, bank, hedge fund, blah, 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 around the world has to submit the trades that they're in by law. And every Thursday, all those trades get verified. This is to stop insider trading, right? Although it doesn't, but that's what it's for. Every Thursday it's verified, and every Friday, that information is then put out there for the world to see. You don't have to use this platform. You can actually go and see it by yourself. But when you go and read it in the original form that the banks put out there, it will fucking melt your brain. You'll just be like, what the fuck am I looking at here? This is crazy, right? So that's why it's really good to have platforms like this, like Prime Market Terminal, that just put it into such an easy to see and digest format. Okay, so let's have a look at them. Overview. It's saying fairly bullish. Seasonality. I like seasonality. Now, what that does is it takes data from 3 periods: the last 5 years, 10 years, and 15 years, and it says over these last 5, 10, and 15 years, during this season, November, this pair has actually been, potentially a sell. October has been a buy. November a sell. December a buy again. Okay, and it gives you the pattern here. Boom, 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 boom. Mostly bullish for now. You even get a little pattern down here. Look. So potentially bullish. And we know fundamentally that GG is bullish, right? So that lines up with the fundamentals. Then we want to look at DXM. Sometimes the DXM can actually match. It can actually be in line with the COT, and that's fine if that's the case, right? You can see here they're heavily in sales, right? You can see it right away. They're heavily in sales. Let's see what COT around. Oh, shit. Look, the banks are in buys. You see that? And if we look at where are we here? Oh, net position. So see right here, right, where it says the net position has decreased and it's went from 25 to 19. What do you take from that? How come it says here they're all in buys, but the net position has decreased? They're just profit taking. They haven't entered sales because they're all still in buys, right? But banks need to take profits as well. You know, they'll close 50%, close 25%, close 80%, the same as what we do, right? They just take commissions. So if we jump across to GJ, let's have a look at it right now, and I'll show you how you can then look at that on the actual chart, right? Look, they're taking profits. Look. What happened last week? They took profits. They fucking cashed in, right? So as it dropped, that they're not in sales. All they're doing is taking profits, and they will potentially enter around this region right here. Oh, sorry. I'm not going to bore you on, well, how the fuck do you know that, right? I'm not just plucking it out my arse. Let's just pull this down now because that's already happened. I'm not plucking this out my arse, guys. There is a reason why it will potentially bounce in this area, right? Let's see where volume kicked in, where the bank slumped into it. Boom, right up here. So that's decent. And the lower edge is down here. Okay, so that's nice to know. Remove. Okay. So that just lets me know that I'd be potentially looking for buys down in this. So let's have a look here, see if it's any clearer on the daily. Yeah, on the daily, what I would actually see, it's good to move it around. I prefer the daily. You're probably looking at around here. Boom. And then that lines up with rejecting bang on the 200 EMA, coming back to this order block zone here. I'm not going to explain that. That's what I teach my guys in Discord. How the fuck did you know to put that there? There is a genuine reason for it. And it's the same reason that this comes back and hits, right? And if you've watched my videos, you'll see that they pretty much all fucking hit. There's a reason for it. You do get a couple that don't, but most of all, right? Let's see where the volume kicked in here. Look at that. There's where the volume is. Fucking lovely. All the stars are aligning. So you can now see how I've put fundamentals into this, right? Okay, fundamentally, we're looking for buys, okay? So even if this starts melting all the way down here, I am not entering it chasing profits down. No, I'm just waiting for that to end. Then I'm going to enter the buys because that's in line with fundamentals. Then on top of that, it's in line with the banks. The banks are in buys, so I want to be in line with them. Then, yeah, it comes back down to supply and demand. This is supply and demand zone. So when it goes back down, rejects an area of supply and demand, so area of support, boom, lump in, and away you go, right? It's fucking lovely. And this will probably be around the 618 Fibonacci, or the 786. I think right about the 618, so let's see. 618 is down here, so it's the 500. It's bang on the 500 fib. I normally prefer the 618, which would be this block right here, which you could go out and do this, right? But I'm going to put this one here because it's an area of supply and demand which has been broken. Once that previous area of resistance has been broken, what happens? It becomes the new support, right? Boom. So that's why I would have chosen this one over that. Usually, if everything was in a straight line and we're looking for a pullback, I would just be looking at the kind of 618 or the 786, okay? But that kind of stuff that I've just shared with you, that comes over time. That's kind of like intuition, time on the charts, blah, 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 right? Stuff that you need to kind of build up. And it will come to you. Now we go back. Yeah, so that's how you work out pre-market terminal. It's fucking amazing. I love it. Let's see what we've got. If we get any trades, I'm going to make this smaller just because I want you to be able to see the chart, okay? So let's have a look. AUD CAD, look at that, look. We'll be buying this, boom, reject here, away it went. So because of the market movement, let's have a look. Let's see if it rejects around here. I'd love to see it actually reject here. If it comes back down, wait there, sorry. Yes, there we go. If it goes back down and rejects here, that'd be fantastic. If it comes down here, even better. But if it comes back down, rejects in here, boom, 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 that'd be great. AUD CHF. So look, I've already marked this up the previous week. You could sell from here. It's in a range. I don't like it. You see this? It's just flat. Look, it's just bang, 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 bang. That's a range. It's not that I don't trade ranges. Sometimes I do. I think I done it 2 weeks ago with pound CHF, but I prefer to trade trends, right? I love trends because they just fucking go and go and go. Ranges is more kind of day trade. You can't really swing trade a range, right? Unless it's a huge range on a higher time frame. So look, this is already panned out. I said when it gets to here, boom, it's going to melt. What's it doing right now? It's fucking melting. I don't have a crystal ball, guys. It's all to do with supply and demand. It really is that simple, okay? And obviously fundamentals. AUD Japanese yen. I just moved that the other day. But yeah, you want to see it break above, come here, retest, reject, and go. So it hasn't done that. So you're now really looking for it to come back and retest. See this zone right here? I'm going to break it. That's what you're looking for. Now that that hasn't played out, this is now what you're looking for. Right there. Can get rid of that. Boom. Bring that down. There we go. Bosh. That's what you're looking for. Bush, bash, bosh. Now, what we have to be aware of here is that the Bank of Japan, they keep talking about intervening, right? And if they intervene, that will fucking melt. So you need, if you're on this and you're like, man, I thought it was if you buy it and it goes up and then it melts, you're like, why is that? It's not because the fundamentals are wrong. It's you go back and check, and you probably find that the Bank of Japan have intervened, right? And that's what's happened. Again, look, here's another one. Boom. I said, look, came up, retest, reject, and melted. If you go to the 4 hour, it looks, look. As I said, look, boom, 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 boom. Here we go. Again, not a crystal ball, guys. Look, here it is here. This one melted. This one done it as well. Broke, retest, and went. It's all supply and demand, right? That's all it is, guys. Areas of value. You always hear me talking about areas of value, right? That's what it is. Look, value, 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 boom. I won't cover that because it's another complete lesson on its own, right? But that's what I teach the guys in the Discord channel. Look at the range. Look, boom, 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 boom. You could trade that. I don't touch this, right? I choose my trades very carefully. You could have made plenty of money here. 1, 2, 3, 4, 5. 5 times you could have made money. I'm not interested. It's not a good trade, right? That's really shit. So I wouldn't be touching that. Come on, Euro GPY. Here we go. Look, broke above, back for the retest. Potentially buys. We just need to wait and see what it does, right? Because it could come back down and retest this block here or this one here. But this is, my kind of favorite. Come back, retest, reject, and then go. But look, bang, bang. We just need this, but we just need a confirmation now on Monday. Let's see how that pans out. Euro NZD, yeah, I would say it's definitely a buy out of those two. But so it's either going to do this, it's either going to come here, retest, reject, and go, or it's going to go like that. It's going to break down, break through, come up, retest, and go. And that's going to be your entry right there. Okay, that's what's going to happen. Sorry, I didn't mean hide. I mean get rid. Again, look, bang. So it came back for a deeper retest. That's why you always put your stop loss behind the previous highs, right? Because if it comes back for a deeper if you put your stop loss here, look, if you put your stop loss there, like every other retail fucking trader, you're going to get stopped out and then it's going to go. Some people call that the fake out strategy. Well, that's it right there. Okay. That's why whenever you trade my style, I always put it above whatever the previous highs were, not just this, but the previous liquidity grabs. So you're way out the way. All right. But I wouldn't have traded that because it's just pretty shit. GBP CHF, we traded that quite a lot. We traded that 2 or 3 times. We made money, but it's not nice. So it's pretty horrible. So we've already canned it. I'm not going to touch that again just now. GJ, yeah, we're going to take that buys if it comes down here. Just need to wait. GBP NZD, fundamentally and everything, it is a buy. We just need to wait for it to come down here. Area of value. Again, there is a reason why that box is there. I didn't just pluck it out my arse. GBP USD, same again. Look, one that we predicted. There it is. Break, retest, boom, retest, and go, boom, boom. There we go. Fantastic. It's probably going to come down to here. Let's see. NZD USD. Oh, sorry, I didn't mean to move that there. My bad. NZD USD. Look, boom, boom. Previous support, once broken, becomes the new resistance. Boom, boom. Right. This one gives us a little pullback here, a little bit deeper. That's fine. It's perfectly normal. Nah, shit. NZD CHF. Yeah, I'd be looking at sales here, definitely. But I mean, I wouldn't touch it because it's horrible. Look, it's really shitty. But you would have been looking at sales. USD CAD. Let's go back to daily. Again, for me, USD CAD will be sales. I don't see it breaking above here. If it does, then obviously you'd be entering here. But it may just give us a pull back up for a liquidity grab. it makes people enter buys instead of waiting for the confirmation, and then they'll enter buys here, and then the market will just melt, right? So that's what we want to look for. So that would be sells. USD CAD. Sorry, I'm talking absolute shit. There'd be buys. So to explain this, it's in an area of value to sell from, right? An area of value to sell from. But fundamentally and blah, 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 you would never sell it, right? And you can't buy it from here because it's too overvalued. So in order to buy it, you need to wait for that to break up clearly, not just like this, but clearly break up, come back down, retest, reject, and then enter. Because the bank's now said, right, USD is so fucking strong. Canadian dollar is so weak. It is never going to come back down here just now. You know, it's going to take ages. So what's our next? What's the next best price you can give me? You know, like, you know, try to buy a Rolex for 25 grand. Mate, I can't afford 25. Come on. Can you do 21? What's the next best price you can give me? You know, so this is essentially what happens in the markets. What's the best price you can give me? Well, USD is fucking flying right now. Canada's totally shit. Best price I can give you is fucking, I can get the market back down to, you know, 1395. Right, let's do it. Boom, you know, and that's how they do the deal. So it's, yeah, buys. You just can't buy it just now because there's no value. USD Japanese yen is buys, but I personally wouldn't be buying it from here. I really need to see it come back and retest. You know, probably this zone here would be a nice retest. Bish, bash, bosh. Or it breaks above, retest, and then goes. You're buying it here. You're not buying this. You're buying it as it comes back down, retest, rejects, and goes. Okay, or you're buying it here. USD CHF. Look, we already marked this up. Look, boom, 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 boom. Obviously, you didn't get the full pullback, but yeah, the trade still panned out, right? Let's have a look at oil. Again, supply and demand. Oils, I love trading oil, but it's really shitty just now, so I'm not touching it. Look, it's just in this horrible mess, right? We really want to see it break out of here, boom, 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 or boom, boom, boom. So it's probably going to be a while before I take oil again, unless I take it as a day trade instead of a swing trade, right? Gold, I think gold can come back down here and then push up. Silver, I think it's the same as silver. Come back down, retest this zone here. It's almost there, and then go. Copper, same look as copper. Boom. Bish. Here it is. Boom, boom, boom. Right, we just need this part now. I won't cover indices apart from the DEX because I traded the DEX the other day. Just a day trade. Actually, Friday, and I never trade Fridays. I just saw it at this massive area of value, massive liquidity grab. I saw it fucking rejecting here. As it got to around here, I jumped in. I jumped in late. I would prefer to jump in as soon as it passed this bottom pin, but I ended up jumping in around here, and I got out around here. So it was actually very lucky. As soon as this pushed down, I was like, fuck it, getting out, because it was Friday, right? Getting out. I got out, and then it started pulling back against me, so I thought, happy days, you know, thank God I got out there. Good timing. So, guys, that's been a pretty long video this time round. I do apologise. It's because, obviously, I wanted to cover inflation, Trump, bonds, blah, 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 so we have a greater understanding, right, of what's going to come in the markets. If you want to join our Discord channel, we have everything you need, right? And we give you 1 month completely free for all new members. We know there's a lot of fucking fake gurus out there and bullshitters that just want your money and blah, blah, blah. This is why we made the channel, because we were fucking sick of it. And we offer you a free month to put our money where our mouth is, to say, look, if you think we're bullshitters, come and join our channel, and it's fucking free, you know, so you can see yourself, are we bullshitters, or can you genuinely make money copying our trades whilst you're learning our methods, okay? I trade a managed account for 3 different brokers, so I trade some managed accounts, they're called PAM accounts. Anytime they're quite large accounts, and they're not props or any of that shit, it's real money. Anytime that I take a trade, I do it all live. So like you can see my screen right now, I do it all full screen. You're only seeing like about this much, but I have a big meter long screen. I do it all live in our Discord channel, and you can physically watch me take trades. You can see me, I can see you if you get your camera on, and you can ask me any questions you want. I don't mute you. You can ask me any questions like, Ryan, how did you know to enter there? What made you take this trade right now? How do you know to put your take profit there? What made you decide to put your stop loss here? You know, so you can actually understand why trades are being taken. And at the same time, you can copy my trades, so you can actually make money while I'm making money, right? And At the same time, my business partner Lee, he teaches scalp trading. So sometimes there's like, I'm waiting for sometimes 2 and 3 weeks, guys, and there's no trade. I'm like, lads, there's nothing to take right now. We just have to wait, you know. Obviously, other times you get a week where you're taking 5 and 6 trades because everything's lining up at the same time. Do you know what I mean? But we're also holding the trades for 3, 4, 5, 6 weeks, so you're getting a lot for your money, right? But then on top of that, each day, my business partner Lee is giving scalp trades. He at least gets 1 to 2 scalp trades pretty much every day, and his success rate is phenomenal. On our Discord, you will see trade results, and all our members, they all post their trade results every day, showing you all their profits and losses, and you just be like, holy fuck, you know. If you do decide to stay with us after the free trial, it's £97 a month. You could pretty much make that back on fucking 1 or 2 trades, and then you've got the rest of the month, you know, to potentially profit from. If you decide not to stay after the month free trial, it's very important that you log into our website or Celix, whatever you've used to register, and you need to cancel it. We cannot cancel it for you. Like, people DM us because they're lazy, right? They'll be like, "Hi mate, I wanna cancel that. Cheers, bye." And it's like, mate, we can't fucking cancel it. And then when we reply to them, they don't reply to us because they're just like, "Oh, I'm gonna run and hide," right? And then what will happen is the system will then take the £97 from you. And then they'll contact us and be like, "Oh, why the fuck did you take it?" Because I was trying to tell you until you fucking ignored me. You need to cancel it because we're a third party, right? It's like you buying something from eBay via PayPal. And then you're calling me to say, "Hi, can you cancel my PayPal payment?" And I'm like, mate, I'm not PayPal. How the fuck can I cancel your payment? You know what I mean? So we're not Celix. We're not, what's the other one we use? We use another Stripe. So whenever you sign up for the free month and the monthly subscription, you're not signing up to us. I know in a way you are, but it's not our system that you're signing up to. You're signing up to a third party system, and therefore I can't go there because I'm not you. So you have to cancel it. All right. But it's dead easy. You literally log into our website, you go to subscriptions, and you hit cancel. That's as easy as it is. It's fucking simple. I don't know why some people don't do it, but yeah, it happens sometimes. Yeah. Anyway, guys, I hope you've had a great week trading. I hope you find these videos useful. What I've started doing now to try and make the quality a bit better for you is I just share the windows as opposed to share my whole screen, because I've got like one of those massive meter-long screens. And I think if you don't and you try and watch my video, it makes the quality really shit. So I've kind of shortened my window down. Okay. I hope that helps. But yeah, if you want to join our Discord, the links will be below. If you want to, pardon me, look into purchasing Prime Market Terminal, the link is also below, and there's a great discount. You just click on the link, and I think there's like a 15% discount already included in that. It's 15 or 20, I can't remember, one of the two. What else? Oh, also, if you click down below, I've included, like, I think it's a journal. I've included my trading list, and I've put together a spreadsheet of what all the news events mean. CPI, PPI, blah blah blah. It's all down below. Just click it and fucking download it. You can keep it for free, okay? Print it off, put it beside your computer so you can read it, and you can start to learn what all of these news events mean and what they do and what effect they have on the market, okay? Finally, last but not least, what I'm going to do now, every 8 weeks, so every second month, not every month, every second month, starting from January, the 12th of January next year, I am starting a 4-week total full scope trading course, like a crash course, if you like, right? It's going to be every Sunday for 4 weeks. So 1 week, we're going to cover a load of shit, really from the basics. You know, I mean, from zero. What is a pip? What is a stop loss? What is a lot? How do you work out your lot size? How do you even place a trade? That's a common question. Mate, how do I even place a trade? I'm going to do that. I'm going to cover everything, right? Then I'm going to give you some homework that you can go away and work on gradually. Not a lot, just enough that you can go away and keep yourself busy over that week. Week 2, on the second Sunday night, we're going to cover tons more topics, and we're going to cover everything, right? If you look at my social medias, either our Facebooks, The Trading Guys, our Instagram, The Trading Guys, or our YouTube on the community, you'll see the details there. What I'm going to do as well, jump across to our Instagram, because we post stuff on there daily and it's quite good. Also, down below here, I'm going to put the link for Discord for anyone who wants to join the 4-week all-encompassing crash course, right? And I'm going to take everybody from fucking zero up to hero in the space of that 4 weeks if you put the work in, okay? Finally, just to wrap up here, the price is usually going to be £359, okay, for each course. However, because the one in January is the first one I'm going to do, and I'm not a fucking dickhead, and I know that it's just after Christmas, people aren't going to have much money because you've been partying and fucking blah, blah, blah. I've done it all myself. I'm making it £159 for the first one, okay? After that, it's going to be £359. This first one is going to be 159 quid, okay? So don't spend all your money on fucking cocaine and hookers. Put £159 by, and you can come on in 12th of January and do out the 4-week course with me, all right? And I promise you, I'm going to take you through every fucking step of it. I'm going to take you through basics, fundamentals, data. I'm going to take you through technical analysis. I'm going to take you through how you piece everything together and how you mark up your charts and how you place trades. I'm going to teach you risk management. I'm going to teach you emotional control. How do you control your emotions? When I go and draw down, I instantly shit myself and I want to close the trades, and then I lose, and then the market goes in my direction, and then I say, oh, why did I close? Yeah, everybody does that. I'm going to teach you all this ways and methods to get around all that, right? And by the end of the 4 weeks, I will train you into a trading guru. Okay? Much love, guys. I'm Ryan Mack. This is the Trading Guys. Have a fantastic weekend. See you later.